Dexcom is another one that we're looking at here. Very similar type kind of chart setup here to a lot of the ones that we've looked at here, similar to kind of Disney or some of the other ones that have gap lower here, but has started to form a base and started to rise from that base going forward. And, our upside target here is really kind of looking at filling this gap here into this, 110, 107, 110 level here to the upside. So this represents fairly substantial amount of upside from where we currently sit right now. It also does trade at a premium relative to its peers, but as you can see, just like CoStar Group and some of the other ones that we've shown you, expected growth rates are supposed to be much, much faster than its industry. It is more profitable than the stocks than its peers. So Dexcom also, from a glucose monitoring perspective, does not have a lot of competitors. They've recently put together some interesting partnerships with Apple to be able to use your Apple Watch to monitor Dexcom products. Also, they've recently had a partnership with Aura Rings. So a lot of these kind of wearables devices companies have partnered with Dexcom, which is clearly a leader in kind of the continuous glucose monitoring device maker industry, and definitely one of the leaders in this particular industry. So for those reasons, I think Dexcom, after having a tough year, is starting to show some early signs that investors are paying back attention to this particular stock. Intel, this is one of the few names that we have in our long semiconductors space. Basically similar type setup to a lot of the ones that we showed you before. Gap lower, kind of formed a base, broke out higher here, started to trade between 22 and 24, broke out above 24, and now consolidating above 24. We're looking for that continuation higher into that low 30 range here and filling that gap here to the upside. From a valuation perspective, as you can see, it pretty much trades in line with the rest of the industry, but it is expected to grow significantly faster than its industry. And this net margin, where right now, because of the restructuring and the impairment costs, they've taken a huge hit and it looks like they're not profitable, but they've already announced that they expect to return their operating margins back to normal by the end of this year. So we're talking about back to profitability before the end of this year, which I think really represents a fairly significant turnaround in what has been a major struggle here in the past couple of years for Intel. I don't think they're out of the woods by any means, but I do think that we are potentially where the worst is behind us here at the moment. So that's why this is a more speculative trade, kind of picking some bottoms here on Intel. And I certainly have picked some bottoms on Intel over the past few years that hasn't played out, but the charts look fairly supportive here right now, and the valuations also provide a bit of support here for the bullish thesis. But if we break below 24, especially if we break below 22, that wouldn't validate our research, and I would say it's time to cut the losses on this specific trade. Square, or otherwise known, rebranded recently as Block. We looked at Squares when it was kind of breaking out from the $74 range. So now that it's broken out and continue to move higher here, our upside target here is around the 150 level here. As you can see from a valuation perspective, Square still trades a pretty significant discount relative to the industry. Even though it's expected to grow much, much faster than the industry, the one thing that's kind of holding the valuation back is really the fact that net margins are still fairly thin as a sort of faster growing, wouldn't quite call them a startup anymore, but certainly in the payment processing space, they're still a relatively new entrance to this particular space. They continue to spend more of their revenue on marketing and sales. And for those reasons, they currently operate thinner margins than the rest of the industry. But, we do expect that to improve over the next couple of years as they continue to work on returning cash to shareholders and working on that valuation kind of creeping back up towards the rest of the industry, which gives a fairly significant upside potential here if you look at it from a valuation perspective. And then from a technical perspective, it's fallen also quite a bit here over the past few years. And I think a revisit to that 150 level here to the upside is a potential for Square.